Going live.
You're live. Okay, cool. Got a few people here. Sweet, it's working.
It is. We're
All
live.
right. Trace, we'll just wait a few minutes, see
Yep.
if anyone wants to come.
We'll wait a few minutes, folks.
And we're just checking everyone here is all right. If someone wants to jump in the chat and give us a thumbs up or
That's a good idea, yep. Yep.
Sweet.
Thanks,
Awesome.
Caroline.
Perfect.
Jake, awesome.
G'day, CB. I'll put that down. It's a bit distracting.
It's a bit distracting when Blake's checking the Ethereum chart before we get going. All right, we'll kick off in a moment, folks. We're just waiting for the few more people to jump on.
All right. Let's
Should we kick off?
yeah, let's do it.
All right, welcome to the Crypto Curious podcast, very first webinar. It's Blake and myself here kicking things off today. So thanks to those who've joined now live and those joining and watching later on. What we're going to go through in today's webinar is a chat around the sentiment and where we are in the market cycle right now, what's happening in the world of crypto and blockchain. Then we're going to talk about October and the next 3 months to come, which is Q4. Then also, is it different this cycle? Blake and I are going to give you our thoughts on this market cycle. Is it different to previous market cycles? Then we're going to jump into some questions that you guys have passed us over the last few weeks, answer those questions. So thanks to those people who have sent some questions in. And then we want to round things out with some live questions as well. So those listening, if you want to get your questions ready, and you can pop those into the chat maybe a little bit later on as we go. So let's crack into it. Thanks for being here with us, guys, for our first webinar. So let's talk, Blake, then about the current market conditions and sentiment where we sit right now in the market cycle.
This market cycle has been quite different to last market cycles or previous market cycles, and we've spoken about that at length. And what we've really noticed as part of this market cycle is that there's been a lot more institutional investors and less retail investors, or at least what we were talking about earlier, the retail investors have been acting differently. They've been buying different assets, and their investing strategy has been quite different. Over the past months, we've seen Ethereum and Bitcoin really just chilling out and consolidating and slowly grinding higher, which is, I think, really sustainable market behavior. What we've seen in previous market cycles are lots of volatility, price going up very, very quickly and then coming down very, very quickly, which makes it a really challenging environment to manage.
And we haven't seen those massive swings in prices. The dips, they just haven't been as huge, have they?
That's right. In the last market cycle, we saw, new projects come to market, bringing billions of dollars into the ecosystem. And as a result, that just turbocharges the crypto market when you have large volumes coming out of nowhere. But then on the flip side, we also had, the fall of Terra Luna,
Mm.
which was a stable coin, which was worth something like $40 billion, vaporized basically overnight. And then secondly, we had FTX. So creating all this volatility. So this is actually pretty lot more calm.
It is a lot more calm. We spoke briefly then about retail and how they might be different this time. I don't know how you guys out there listening have your friends or family, if they're talking about crypto at the moment, but Blake and I were just saying before we jumped on that there's a different feeling out there with retail. They might be there, but they may be interacting a little bit differently. So do we see that they're maybe still coming or they're here now, but like you said, maybe just acting differently?
Yeah, I think a really great indicator that we can look at whether or not it's going to be the same or similar as your previous market cycle is volumes on things like pump fund, like meme coin volumes, because lots of retail or everyday investors do allocate a portion of their portfolio to meme coins. As well as that, we can look at Robinhood in the US, which is a large trading app where people buy and trade options in cryptocurrency. And as a result of that, you can gauge where we're at. Other things that we can look at is the Coinbase mobile app, where that ranks in the App Store. We know that there's lots of retail investors coming into the ecosystem when we see the Coinbase app as number 1 or number 2 in the App Store, as opposed to down at like number 50 or number 100.
So as soon as that comes up.
So it is quite different, but we're seeing your different market behavior. These institutions that come in, they're buying large amounts of cryptocurrency, but they might not do it on a cryptocurrency exchange. Instead of buying $1 billion of crypto, like retail might do that, in lots of $1,000 on average, whereas these guys come in and buy $1 billion in one transaction, and they do it via an OTC desk or an over-the-counter transaction, and it doesn't affect the market in the same way.
Let's talk a little bit about the macro, and I'm guessing that everyone listening here is probably from Australia, unless you're up at some silly hours somewhere else. But we talk often on the podcast about the US and the macros, and we talk about, the Fed and CPI points and that. But why is the macro so important?
So what we saw in previous market cycles during COVID was that the US government gave stimulus checks out to millions of Americans, and as a result of that, people had surplus spending money to speculate on things like digital assets, as well as that interest rates were very low, so people's housing repayments were quite low, and as a result they had more disposable income to invest into cryptocurrencies. And really what we want to see is, we're not going to see that environment again over the next 12 months, but what we are seeing at the moment is, not just in Australia but also in the US, rates decreasing, and that's really good, because when people are getting less return from their deposits in their savings, they can then look for other things to invest in, like gold, like Bitcoin, or even equities.
Okay, there you go. So that's the market where we are now. So maybe let's move on and talk a little bit about the fact that we have just said goodbye to September, which is a notoriously red month, which means it takes a dip, and it did do that towards the end of the month, took a nice little dip, and we've just ticked over into October and things are looking great. We've just had a look at the Ethereum chart before we jumped on. It's looking quite healthy. So October is affectionately known as Uptober, normally a green month. So fingers crossed that continues that way. What do we think for the last quarter of the year? Everyone's hoping that's going to be a good one. What are your thoughts?
Yeah, well, we have seasonality in crypto, and that means that some months on average perform better, and some months on average perform worse. September on average performs worse, and October on the flip side generally performs better. So I think everyone's hoping that we see a positive month. I was looking at the data yesterday, and I think Bitcoin on average returns 20% over the past 10 years, 20% returns or 20% growth in October. So that's really, hopefully we see that. Hopefully we see more, and we can see that momentum continue into the rest of the year, because it has been pretty sideways for the last several months.
Okay, so one more thing we'll chat about before we roll into some questions that came in over the last few weeks. And we're going to talk about, is this time different? Is this market cycle different? Which is a really hot topic across the board at the moment. So what do we mean by, is this time different, firstly?
Yeah, so we traditionally see these 4-year cycles, which include 3 years of the market moving up and 1 year of the market moving
Going
down,
yep.
Which is a big challenge. But the environment might be different this time, where if the US and Australia and other Western nations continue to cut interest rates, it means there's more money that can flow into the digital asset sector, and it may break these 4-year cycles. But it's really hard to know whether these are self-fulfilling and they continue on, or it's really now more and more correlated with traditional markets like the stock exchange. And what we see, in the Australian Stock Exchange and the US Stock Exchange and the European Stock Exchanges is that they grind higher over time. There's less volatility, and they're driven by the macro environment, by interest rates. So
I think we're definitely seeing less volatility.
Yeah, we're seeing less volatility. Are we going to completely decouple from these 4-year cycles? Maybe they might just smooth out. And
we're seeing less volatility, and there's more regulation coming through, so people are feeling a bit more safe in that area also.
That's right. I think that plays a big part, and then we'll create more. It'll match up more with the stock market.
Yeah. So we'll see how it plays out to know whether truly this is different this time round or not.
Exactly.
Okay, let's move on now to some questions that we have had. Let's see who put this one through. Not quite sure. Looking for a suitable startup to spread for crypto portfolio, 6 coins, and what percentage of the total stash to put down on each, please? It's quite specific, that one.
Yeah, it's very specific. Here we can't give financial advice, but what we can provide is some general model portfolios that have been used in the crypto ecosystem. And the first model portfolio is to have exposure to just Bitcoin and Ethereum, with a model portfolio being 60% Bitcoin and 40% Ethereum.
That's really vanilla. That's real basic,
really
but
vanilla.
That's the safe one. Yeah.
However, Bitcoin and Ethereum have performed better than any other asset. We know that by their price and their market capitalization. And it's really hard to outperform Bitcoin and Ethereum over the long term. We see digital assets do this in the short term for spurts, but they can't consistently deliver the results that Bitcoin and Ethereum have. Now, there are more granular weighted style portfolios. And what we mean by weighted is that, Bitcoin would have the biggest weighting. So you'd have, say 50% of your portfolio in Bitcoin, 30% Ethereum, and then, allocating smaller percentages to more risky investments, which could be a layer 2 blockchain, alternate blockchains like Solana, or even more speculative assets like, you want to have 90% of your portfolio in solid investments. But people also like to have fun and speculate on new protocols. And
like if you do want to throw something at a meme, we're talking about a really small percent here.
Like a couple of percent.
1%, into a meme. Yeah.
And what meme coins are kind of like a lottery ticket, Tracy.
They are like a lottery ticket, exactly.
You might be able to afford to put 0.5% or 1% of your portfolio, but you really want to see 100 times growth.
Yeah, you could look. To be honest, you could hit something and it's 1,000x.
Yeah, that's
right.
But
the likelihood of that happening is very, very low.
It's like a lottery ticket.
It's a lottery ticket, and it's something fun. They've got great communities, and Yeah, but again, it's gambling, 100%. Okay.
But certainly just coming back to this model portfolio, you want to have a weighted basket of assets across different subsectors in the crypto industry, being, layer 1s, layer 2s, infrastructure, AI maybe, but make sure, you're allocating appropriately and don't have too many altcoins. What we do see is people, having 50, 60% of their portfolio in altcoins. Yep. And it happens. The allure and the promise of all of these new protocols can be very attractive, but at the end of the day, they're not all going to succeed.
And before we move on to the next question, I might just say if you have a plan to buy, also have a plan to sell. So you know how long you want to hold on to these, and then when you want to sell. It's always good to have a rounding plan. Yeah, absolutely.
Yeah.
Next one we've got here. If I transfer my Bitcoin into a debit card, is it reported to the ATO, and how do I do it? So I need to swap to USDT beforehand, and do I have one? Do you have one that you could recommend?
Well, we'll tackle that in two parts. The first one is it reported to the ATO?
Yep.
Now, any Australian exchange or exchange that's registered here in Australia has to register for something called AUSTRAC. And that means they need to collect KYC, which is your information about the person, their address, and the ATO can audit these exchanges to find out a little bit more about your crypto transactions. So I'd be acting in a way that those transactions that you do make could potentially be visible.
Yeah.
And Tracy, you might know a little bit about some of the cards that are out there that are really great to use.
Well, look, there are a few different options at the moment. Crypto.com is one that I've personally used myself, but there are many others out there. If you just do a quick search, you can find different exchanges. CoinJar has one as well. There are some international ones that you can use also. BitGet, I believe, has one, and Coinbase. There's also the MetaMask one that is coming. It's in beta at the moment. Myself and Blake have signed up for that one, but I think that's a little way away from coming on Australia. But yeah, you know what, we'll do some more research on some of those as well and pop them in our Facebook group as well. So maybe you can jump in there and have a little look.
I've actually used the CoinJar one early on. Okay. That was really great to use, and I've got the EtherFi. That's a virtual card, which is great because you can just download on your phone. You don't need the physical card.
Okay.
You can load up Ethereum or Stables onto there and get going, but you do have to go through a verification process.
I think that's interesting. All right, okay, let's move on. So why can't I transfer my Coinbase account to my bank? Are the banks blocking crypto investments?
Yeah, in some circumstances, the banks are blocking crypto investments. Yes. Now, there's all sorts of reasons for this happening, but there being a lot of scams in the crypto industry is certainly one of the reasons that the banks provide. And they have a soft rule that says if you are transferring more than $10,000 to a cryptocurrency exchange, they can block that. Now, there's several ways that you can mitigate this, and we've all been through this. Is that firstly, you can call your bank and be like, hey, I know what I'm doing. I've invested before. This isn't a scam. Please process my transaction. And most of the time, you can get your transaction through to an exchange that way. Secondly, you can use an OTC desk, which is like a white glove service. All of the exchanges use it. There's some specialist firms that do this, and you can jump on a phone with them. It's like a broker, and they will step you through the process of doing a transaction that's over $10,000. Often there is a minimum spend with those services of around it could be $25,000, but others.
I think going back to your bank too, when you have made that first transaction, I think it becomes easier to make the subsequent transactions after that. But you know what, the banks are make a bit of noise with your bank if you're having an issue.
Another strategy that you can take is do several transactions under the $10,000 threshold, which will potentially mitigate your transaction being blocked.
And it's going to be different from bank to bank.
That's right. Yeah, some banks are a little bit more crypto friendly.
Yeah,
I don't actually have an updated list
than others, I believe.
Changing.
Yeah. Okay, what's up next? Question 4. Here we go. Will XRP token be added to the choices available? Was that on the
Was that on the list?
Was that on Bamboo?
We've been very conservative with our listings on Bamboo, and we've only kept our listings to Bitcoin, Ethereum, gold, and silver. And the reason for that is that some of these assets can be highly volatile. Assets like Solana and XRP see growth and pullbacks of 80+%, which is incredibly hard to manage. Even the professional investors get this wrong, and people often get emotional. We have people's self-managed super funds accounts on our platform, and Bamboo really sees itself as an easy way to manage and get exposure to get exposure to cryptocurrencies. And bringing on these assets does create a lot of risk, and
we don't want that emotion involved.
No, that's right. We're here to help people build wealth and achieve their long-term goals. And that may or may not be possible with XRP and other assets, but we have really strong conviction in Bitcoin and Ethereum that it's going to be around in 10 or 20 years' time.
Yep. We appreciate the asking though. Moving on, what are your thoughts on investing in MicroStrategy? We do love MicroStrategy.
MicroStrategy is a really interesting one. So for those that don't know, MicroStrategy is a company, it's a software company in the US that uses its revenues and its profits to buy digital assets, mainly Bitcoin. And as a result, they've got an incredible amount of Bitcoin. I think like $40 billion.
Easily now. I have to look at how much actual
maybe
Bitcoin
more,
they have.
$50 billion. And that means the stock price of that company is correlated or tracks the price of Bitcoin. But there are some key differences. They use leverage to borrow against the company, to borrow more money to buy more Bitcoins. And as a result of that, it is more volatile. It goes up quicker, but it also goes down quicker.
Yeah.
So if you do want a leveraged product that's easy to, that's regulated, that's easy to buy and sell, it could be a great product for you. But it does come with additional risks that above and beyond just holding the underlying asset.
Maybe you look at, if that's the type of thing you're looking at, it's best to look at one of the ETFs.
Yeah, that's right. Yeah. So certainly making a decision between ETF and MicroStrategy could be something that you would like to do.
You had another question here, an easy to execute blueprint.
Blueprint.
Yeah. So I think we were potentially a investing blueprint.
Yeah. So at Bamboo and the Crypto Curious, we really can't give financial advice, but maybe what we can do is point you in the right direction. There's a really great group called Collective Shift. They help investors create a plan and then execute on that plan, depending on the individual's risk tolerance and goals. Ben over there takes care of many investors, and we'll be happy to, provide a link in the notes or send that around after the show. But you'll be able to find them quite easily online.
That's Collective Shift, yep. And here we go. Can you invest in other cryptos on Bamboo? It was only Bitcoin and Ethereum. I think we actually just really answered that one, didn't we? And the reasons why. Yeah,
that's right. I think, we're trying to stay as conservative as possible.
Yep, that's it.
Because there are top 10 projects that have blown up, in the crypto ecosystem. I've been in here since 2015, and the top 10 coins come and go, but we've seen really Ethereum and Bitcoin stick
and we're
around.
really about that dollar cost average, just Bitcoin, dollar cost average and chill, slowly over time. That's it.
That's right. And when I speak to people that have been around the crypto ecosystem since 2010, 2015, I always ask them, hey, if you just invested into Bitcoin versus, speculate on, all sorts of things that have come, airdrops, meme coins, Ethereum killers, blah, blah,
NFTs,
blah. Everyone always says, if I just bought Bitcoin and held, I would have done better.
100%.
Everyone regrets not stacking Bitcoin.
Yep. So even for anyone starting now, that is 100% the advice I give. Just pop a little bit away at a certain time. You're never too late to get started. Dollar cost averaging 100% the best strategy. And for my money, it's still to Bitcoin, Ethereum.
Yeah, that's right.
Not financial advice. Okay, here we go. Where do you see the future of Solana? Has the altcoin season finished, and what is the time frame? There's probably two questions there as well. Solana and have we seen an altcoin season?
Do you want to take the Solana one, or do you want me to?
I'll get your thoughts on Solana as well.
Yeah, so Solana is an incredible project, and the thesis of Solana is to, build the infrastructure so something like the NASDAQ, which is the US stock exchange, can run on top of it. And they've got high speeds, low costs, which makes it a really great choice for developers and different projects to build on top of, because they can get to market quickly, and it's not going to cost their users very much money when they're using the applications on top of Solana. I think that they have a long way to go in order to bring real world assets onto Solana, because it's a highly regulated environment. And it is a bit of a newer blockchain compared to some of the other ones like Bitcoin and Ethereum. So, there is a little bit of a leeway. I know there's lots of developers on Solana doing incredible work and building incredible applications, but these things take time to mature.
Yeah.
And I think there's stages of maturity as well. So I think they're actually going to achieve their goal.
I agree.
But it could be another 10,
Mhm.
15 years
Mm.
before they actually do that.
Yeah, I mean, like you said, they've had a few, stability or some issues along the way, but I think they are as well. You talked about what they're planning to do, like it's a grand plan getting to the NASDAQ, but they've also got this entire community and they kind of stumbled across meme coins and pump fund, and Solana really is, and that's propping them up. They've kind of, maybe it's an area they didn't want to play in and they didn't want to be known for, but it's there. It's holding them. Yeah. It's holding them up. That's there right. Also. So,
and I think, meme coins are a really great way of stress testing the blockchain. Having millions of people coming on, doing, lots of high volume transactions, I think is a really great way of stress testing these networks.
Yeah, well, I mean, right now, 6 billion in the last 24 hours in meme coin volume on Solana.
That's crazy.
So, crazy town. I think Solana's, got some longevity to go. Alt season. I think we're probably in a mini alt season right now. Like, it's not going to be the way it has been in the past. But if you look at a few things that have been pumping just over the last week, there are unusual things that are popping up. Some utility tokens that are maybe not familiar to us that are doing some big numbers.
Yeah. When we look at alt season, we really need to look at Bitcoin dominance. And what that is that, out of all the value locked up in cryptocurrency, what is it, $4 trillion?
Just over.
And the proportional value of Bitcoin of all of that value is about 58%. And if we want to see an alt season, we need that to go down. So that means that people would be selling their Bitcoins and buying altcoins, right? And that's what will keep the price of these altcoins going up. So it's a simple chart that you can follow, the Bitcoin dominance. It is a little bit more technical, but it is a really great indicator of whether or not alt season has happened yet or not. We've recently seen Bitcoin dominance increase to 65% of the total value of cryptocurrencies, and it's now trending down, which means people are selling their Bitcoin for altcoins, and what we want to see is that go as low as 30%.
Yeah.
Right, and that means a lot of people are selling their Bitcoins
and
then buying
alternative coins.
And I think when we see that particular metric, it's going to definitely feel a lot more like alt season than it does right now.
Yeah. Okay, last one we've got here. Why are the prices of cryptocurrencies on different platforms or apps all different to each other?
Yeah, there's all sorts of reasons for this, and we see it every day, Tracy. Firstly is currency differentials. Sometimes, there's a currency conversion that happens from US dollars or from euros, for example, into Australian dollars or into New Zealand dollars. And the currency rate may be different that they're using. We don't know where they're getting their data from or what they're quoting. Secondly, it's from fees, both published fees and hidden fees. Now, we always see a spread in cryptocurrency order books, which is the difference between the buy and sell price. It's a little bit technical, but often there is a spread of anywhere from 0.1% to 5%, and different exchanges can create different spreads or hidden fees, what we call it, and then present that to their customer base.
Why it's important to check out different exchanges.
But then there's also an important thing called liquidity.
Yeah.
Now, this is going to be different on a decentralized exchange versus a centralized exchange, like a Uniswap versus a Binance, and they treat liquidity differently, right?
Yeah.
And if there isn't much trading volume, then these spreads will be bigger.
Yeah.
And if there is a lot of trading volume, then these spreads or these hidden fees will be smaller. And there are tools that you can use to look at this with more detail. But generally, they would be the three key things to consider.
There you go. That's really good information. Okay, that's it for our questions that were sent in. So feel free, folks who are still with us, to pop any questions into the chat. Have a little look here. We've got, Jimmy has spotted my 9-inch nail sticker on the computer. Hilarious. We've also got Ned here saying, what's the single biggest existential risk to crypto that isn't regulation or price volatility? Look,
There's a couple that
yeah,
spring
a couple.
to
I got
mind.
one that sprung to
Yeah,
mind. Might
what's
be
that?
different to yours. Mine's actually, it's not a risk because I think it's already mitigated, but it's the quantum computing risk.
Ah, that's a big one.
Yeah, look, and I think that's earmarked for 2030
Mm.
as a number. But again, it's a risk that a lot of people talk about, but it's already been mitigated by a number of things that are going to come to
Yeah.
play.
And just to unpack that a little bit more, Bitcoin and other cryptocurrencies use encryption standard called SHA. Is it 64?
Something like the number.
Or 128. And the thesis is that quantum computing can break this, and then whoever has this power can steal all the
All your
bitcoins.
bitcoins, yep.
But that's not here yet. But there are steps being made by some smart individuals to mitigate or prevent this from happening. And that's certainly a big one. A couple that's come to mind for me are potentially a stable coin issuer like USDT, Tether going down. Now, there's been
What's the real possibility of that happening?
Well, there's been a lot of FUD, fear, uncertainty, and doubt
Yes.
about Tether over the years. But if something happens, like the bank that they deposit, I think they've got like a couple $100 billion now. If something happens with their protocol or with the monies that they have deposited, that would create systemic issues and could destroy the whole industry for a period of time. And similarly, if an large international exchange like Binance or even Coinbase goes down or gets hacked for all their funds, that would cause systemic issues in the ecosystem. So there's some things that pop to mind. Yeah.
I'm just trying to think if there's anything else that I can think of that would be a big risk in crypto. I mean, obviously regulation used to be one that would pop up, but I think regulation will come in our favor now. So I can't really think of any regulation that would be against us. It's all moving towards us. So I can't think of. What else have we got here? Does Bamboo app get audited with regularity or have any proof of reserve published? Yes, we do get audited, don't we, Blake?
Yeah, we've done 3 audits now. It's been a big job.
It is a big job every year. We leave the accounts department alone for quite some time when that happens.
Yeah, but we get audited now. So that's happened 3 years in a row, 3 successful audits. And we're proud to do that. Certainly doing a proof of reserves, like a zero knowledge proof of reserves, would be good. But that's something that we haven't built yet, but it's something that we could look at in the future.
Absolutely. Okay. Hey, guys, love the show. Favorite RWA protocol. Also, any recommendations from where to find some alpha other than on X? Oh, okay. You got a favorite protocol? And X is honestly probably the best place to find alpha. You're right. I've got a bunch of favorite calls or key opinion leaders, as they call them, on X that I could probably, I haven't done that for a while, but I've probably got a bunch of favorite people that I do follow on X that I could pop in the Facebook group. There's probably 3 or 4 people that I really trust, so I'll do that and pop that in there. But have you got a favorite protocol?
Favorite protocol? I haven't dabbled too much in real world assets, but Red Belly is an Australian project that's doing incredibly well. Jump on and look at them. Their team is based in Sydney and they're moving leaps and bounds. But it's really not my expertise, that space. But as for other places to get alpha, there are a lot of groups in Telegram that you can find. There's also Reddit, who have some really great subreddits that you can jump on. That's always been a bit of a go-to. And there's Forecaster, which is a mobile app and has a lot of really passionate people that support the industry. A lot of developers, so you can see innovation happening on the ground floor there.
Yep, that's a good one. Another question about Bamboo. Can I sell separately my part of gold, Bitcoin, silver from my Bamboo account? Yeah. You can do.
Yeah, you sure can. When you go to sell your assets, you'll be presented with a screen that allows you to sell your portfolio in proportionality or an individual asset in your portfolio. So if you have any issues, just
reach out to support. They're very helpful. They should be back with you within half an hour if there's any issues there. Also, we've got here, love the integration with crypto tax calculator on the app. Yes, we worked hard to get that done earlier in the year before tax time, so that was a big win.
Glad people are using that and taking advantage of the promo code that we have to get a discount
on crypto tax calculator.
Crypto tax calculator.
All right. Any other questions, folks? Let's have a bit of a price check on Ethereum right now. We've had, and as you know, or you may not know, right now the Token 2049 event is happening in Singapore.
Yeah, so it's, I think the world's largest crypto conference. They get 20,000 people.
It's huge.
Ben, who came on the podcast a few weeks ago, said, it's bigger than it has been any other year.
Okay.
So
Blake went, was it last year? Or I went 2 years ago. It's a massive conference. Everyone's there. I think Vitalik's there was speaking yesterday. Everybody in the industry usually heads over there. Like you said,
so I think we'll be hearing some announcements. So hopefully we'll have some fresh news for us all next week.
And you usually see a bit of price action. We're actually saying usually if some particular project announced something, then their token will run. Or everyone's too busy over there doing things that the market kind of stays stable and dead for a little while. Have we got another one here? What does it say here? Also, if decentralization is the end goal, why not most people still on board through centralized exchanges?
That's a really good question.
Is that a permanent contradiction? There's so many contradictions in this industry, isn't there? We're all excited that the ETFs are coming and, all the bankers can get involved when really we're trying to be anti. Yeah, how do you want to touch on that one?
Yeah, so decentralization is the end goal, but there's a lot of challenges for onboarding and offboarding into decentralized environments because of their nature. As well as that, building, security tools and easy ways to manage their crypto is a little bit more challenging in a decentralized environment versus a centralized environment. But people tend to gravitate towards cryptocurrency exchanges because it has it's more familiar. It's kind of like their internet banking. It's kind of like their brokerage platform, and they don't have to worry about their private keys or even, there's measures in place to help people from stop sending their crypto to the wrong address, which we see all of the time. So we would love to see, your platforms like Coinbase and Binance move across to a decentralized model over time. But, I think we're still a little while away from that.
Although in saying that, a lot of the decentralized exchanges, the UI UX has come a long way.
Yeah. Well, I use the OKX wallet sometimes, and they have an integrated decentralized finance section in there. So, you're looking, it feels like you're in the OKX wallet, but you're actually using DeFi, and it's really starting to blur the lines there between what you're using, whether it's a decentralized product or a centralized product. Yeah.
Shows how early we really are.
Still a long way to go.
Yeah, there we go. Okay.
All right, maybe we can get another question or two before we
round
wrap
things out.
up.
Okay, Ned's just smashing out the great questions here. One more. If crypto is the future of finance, why after 15 years is the main use case still speculation? I think we've actually got, plenty of use cases really. Yeah. But
there's the big, I think maybe the killer use case that we're seeing really come to prominence in recently is stablecoins. Now, stablecoins doing $27 trillion of volume, lots of cross-border payments, and it's really the beginning with regulation evolving. We're seeing more market participants come in, issuing and utilizing stablecoins, which could potentially transition a lot of volume from people like traditional payment rails like banking to more decentralized model.
Mhm.
And secondly, decentralized finance is a massive use case that I think is not speculation anymore.
Yeah.
There's so many people
Well, you can get your home
and
loan
businesses,
now.
people can actually use this for lending and borrowing, which I think that subsector could increase by 100 to 1,000 times over the next decade.
I think that lending through DeFi will be the big boom. There's still some. Yeah, they need to make it a little bit easier.
It still is clunky, but what we're also seeing is that there are products in the market like Block Earner,
for example,
provide like a centralized front end and a regulatory compliant front end that comply with Australian rules and regulations. But the back end could be decentralized finance, where it actually leverages protocols like Aave for the actual smart contracts and the lending and borrowing. So a tale of two worlds that I think are going to eventually merge.
Yeah, it's exciting. Thanks for the questions, Ned.
All right. That might be a good time to wrap it up. 40 minutes
I think
in.
that was great. Thank you for everybody that joined, and thanks for those who sent in questions ahead of time and then made time to ask questions here live on the chat as well.
And we'll send around those links.
Yeah, 100%. Yeah. And I'll put some of those details in. If you're not part of the Facebook group, then please jump on. And what we'll do is we'll send a follow-up email as well with anything that we've promised to give you guys during the stream as well. But again, thanks for joining, everybody.
All right, bye guys.
Bye.
Thank you.